morning, guys. So in this video I'm going to be breaking down the GJ trade which I've just taken. Really nice trade, really clean, not much drawdown at all. It was a little bit counter trend. If you watched the GJ market breakdown which I did last night, you would have known that the market structure on GJ overall is 3v1 bearish, but us being on the very strong weekly support, which I'll just show you guys here quickly, is a huge factor that we had to take into consideration. So obviously we closed on the support last week Friday, and now we have rejected this zone so many times before that there's a very good chance that we're going to reject it again. It's also at the bottom of a range, so if we didn't close outside of the range and we respected the range, there's a good chance we're going to continue back up to higher levels within the range. So yeah, this is just going to be a quick breakdown of the trade which I just took, and I'll show you guys a few things that I was looking at before taking the trade. I'm also going to show you guys a few tips which you can use when entering into a trade to help you guys with some risk management, as well as just entry points and that sort of thing. So yeah, I'm going to drop down back to the 30-minute time frame because that's where I was looking at the position from. So obviously we had formed this range this morning. Now on the breakdown last night, I did say that I wanted to see a new low on GJ first, and then we come back into this area and start moving up, because that would mean that 30-minute structure would have flipped bullish. But we didn't get that new low, but it wasn't a problem because obviously we are on such a strong support level. So it was kind of expected we could just start moving up. So we made this strong bullish push. Again, counter trend technically if you're going purely by technicals, but what we did have was all this range to trade into on the left here. We had a huge amount of clear range, which is one of the confluences as to why buys were on the table and why buys were such a good option. As you can see, we started consolidating after that push. So what we did in this consolidation was formed a top of a range and a bottom of a range, marked those both out. So obviously because of the bearish market structure, I had this marked out as a possible selling zone, and then obviously I was quite keen to buy into these zones over here. What I did want on either side was a close above or below the support, well, close below the support and close above the resistance if I was going to take either position. That's just a confirmation that either the support or resistance isn't being respected, and then we can start looking for the further candle confirmations that we're going to continue in that direction. So what ended up happening was, I'm going to play it on a little bit, we did continue ranging a little bit. This was getting into pre-London volume. So as you can see, candle volume is very small, candles are closing very weak, lots of doji candles ranging. Then we started getting some stronger body closes. As you can see, this candle did close a little stronger than the previous ones, but still nothing significant. Then what happened was, again, another doji candle, and the following candle gave us exactly what we were looking for to get these early buys. So this is called a catalyst candle. It's quite high level terminology and it's not spoken about a lot, but basically what it is if we pre-volume times and we are ranging and then we get a strong candle close, it can be in either direction, a strong bearish or a strong bullish candle. That candle is often referred to as a catalyst candle. Now what that means is that a lot more of either buyers or sellers have just entered the market. In this case, a lot of buyers have entered the market. As you can see, this candle is significantly bigger than all the previous candles in this range. And what that's telling us is, okay, we're starting to get some volume in the market. This candle also came just before London opened. So this is pre-London volume coming in. And then the next candle, the 10 o'clock candle, my time, is London open, which is 8 o'clock London. So this was a massive added confirmation and confluence that there's a good chance that we're going to continue this bullish push. So we got this perfect candle close above our marked out resistance as well. So this is again an added confluence. We closed above the resistance, meaning that if we retest this, so basically get a wick down and break the high of this candle, there's a great chance with these clear candles to the left and all this range to trade into that we can more or less start moving bullish and correct a lot of this move which came down on Thursday and Friday last week, mainly Friday. So yeah, this was a great candle setup. These catalyst candles are something you must look for always pre sessions. They happen a lot pre-London, pre-New York, and basically it gives us an indication as to okay, now there are people in the market, either buyers or sellers, and it should tell you more or less a direction that the open could go. So in this case, you know, lots of buyers, a strong bullish candle, a strong catalyst candle. And the next candle, what I was looking for, obviously, let's talk about the entry, was I had marked out the high of this candle, our catalyst candle, because we had closed above our zone. So what I had done is I had set a buy stop above this level. So it was about 1 pip here, about a pip above this level. I'll obviously put my entry on the screen for you guys. And the TP, I mean, the NTP was very high up. It was, you know, much higher than this. But of course, how I trade is I secure profits along the way at about 10, 15 pips, 20 pips, 25 pips. So the stop loss, obviously, I hadn't established yet. That normally comes after we get the downward wick on the new candle. And then my stop loss goes below that wick. And that allows me then to have a smaller stop loss. Then if you're taking these breakout trades, at that point, the stop loss would have been, you know, 20 pips or more. So what I did was, now whenever I have my idea set out, I drop down to the 5-minute time frame. And within the 5-minute time frame, after seeing the first few candles form, that should give us our bottom wick. So I'm going to play it on. So this, just remember, our entry is at this white line. So once we go past that, that'll give us our entry. And normally in the same candle that you have your entry, it should give you your stop loss as well. So as you can see, at this point, we're entered in. We also have been given our stop loss. It is at about minus 10 pips. So now we are in the trade. As you can see here, we came past where our buy stop would have been over here. So that's where I had my buy stop placed, about 149.806, around that level. Again, it will be up on the screen for you guys to take a look. And from this point, you stay on the 5-minute time frame. Just because we look for trade entries on the 30-minute time frame and candle confirmations on the higher time frames, the 30-minute to 1 hour, doesn't mean we neglect the lower time frames. We must still take into consideration everything that the lower time frames tell us. It is our strongest tool for managing risk, these lower time frames. It gives us areas to close half of positions, that sort of thing. So I'll show you guys a few tips which you can use when doing that, but let's see how this played out quickly. So we started pushing up a little bit. We had our first proper candle push on the third 5-minute candle of this new 30. Now what I do at this stage, and this is just a little tip that you guys can use, is once we start forming these new 5-minute candles and they reveal where their lows are and they start closing, we can mark out the lows of those 5-minute candles. And what we can use this as is areas where we can close half of our position or close whatever percentage of the position you want to if price starts going against us. So if we start getting candles not respecting 5-minute lows and coming down to these areas, we can close half of our position. Again, over here, we can close some of our position just to take risk off the table. That's how you manage risk. So that's why the 5-minute time frame and the 15-minute are so powerful when it comes to managing risk, because you can really get a gauge of what the candles are really doing. Because essentially these tiny candles, these lower time frame candles, make up our bigger candles, our higher time frame candles. So I'll let this play on. We started getting some pushes. It was at this point where I secured my first bit. Yeah, I secured the first about 90% of the position because it is my first trade of the week. And I normally, for the first trade of the week, I don't want to take too much of a risk. If I have my profits on the table, I'll take them. So I secured about 90% at about 10.5, 10.6 pips. So call it 10 pips. What I do at this stage always when I hit my first CP is move my stop loss to break even. This allows my trade to be running risk free. So that means now if the price comes back down to my entry, it'll take me out of the trade, and only the percentage left in the trade, known as the runner, will be stopped out for nothing. That way I can't lose any of the profits which I've made, and it's a great way to manage your trade. So at this stage I had only 10% of my position left. So as you'll see, I opened a 20 lots on this position. I secured 18 lots and I had 2 lots left as my runner. Now I'll play it on. We came down a little bit but continued pushing bullish, and we had some very strong bullish pushes. So I ended up securing another lot, so 1 full lot, so another 50% of my runner at about plus 15 pips, and I ended up securing the last lot at about plus 22 pips around there. So it was over plus 20 pips. So really, really nice trade. I could have let it run longer. As you can see, we started really pushing after this, and you know, could have got more out of it. But again, like I said, first trade of the week, it's not a time to be greedy or want more. Just take your profits, be happy with what the market's given you, and then, you know, either stop trading for the day, so take your profits and be happy with that, or you can take some low risk trades later on in the day. It's just a great way of being able to manage your account. You know, the small gains always win if you get them consistently, rather than trying to, you know, double, triple your account every week or month. That often is very, very difficult and leads to a lot of issues. So yeah, this was an amazing trade. If I go back to the 30-minute time frame, you'll see the formation of the 30-minute time frame candles from, you know, we had all those 5 minutes making these up, and you can see just how clean a push it was. I had these marked out as possible rejection areas, but we did manage to push through them, and yeah, I was really happy with the trade. I hope that it does help you guys out if you guys were looking at how to possibly manage trades or when to secure profits. So yeah, please do remember to leave a like on the video, guys, and leave any comments if you did enjoy it, and I'll see you guys in the next one.